Yeah, I don't do requests, but a couple of people asked about Icon, and we had traded it a little bit on the long side with upside, leading to its final failed setup over here. Before I get into the detail, 13th of March, 7:30, come and get our free webinar. Go to themarketsniper.com, click Getting Started, and you get a short questionnaire on how whether it is suitable for you to trade with us. So that button over there, and you can decide whether you enjoy the information that's imparted for you on the 7 mistakes traders make and the 3 great gifts. Back to Icon. So if you have a method, instead of needing to ask people on YouTube, you can actually do it yourself. In other words, it's a totally transportable skill. Our community is doing it and working on it and refining their skills. What you have here was a setup which failed, which straight away by definition in HVF method tells you that it's probably a beginning and the end of cycle. It pumped, it started to lose the RH2 there, came back down, stalled on the funnel as it should. It was a key level of significance, kind of bear flag like. The minute that spill occurs, you should be on the bear side for the time frame under review. So everything is for the time frame under review. Against Bitcoin, Icon against Bitcoin for this time frame under review, you should rather have been in Bitcoin than Icon from this moment onwards. It's quite simple, really, once you understand it, and more importantly, along the way you get many clues. You get a return move to the funnel. Let's take it down a few time frames. Maybe do the 2-hourly first. So once you always break the funnels with momentum. That in itself is micro inversion. If you drop that to a lower time frame, haven't got time for it today, go do it yourself. You can see, once you know how to draw, you'll see. Note once you've broken, return moves, then a big spill. Again, more structure. Very clear structure for us once you understand. So I'll go to that hourly now. There it is. Final low 3, break, target implied, perfect target. You have grind lines under this, so it rallies all the way up to funnel, dies in funnel. Little squeezes, again, structure, spill, grind line, spill, structure once it's spilled, spill, grind line, attempt to get away. Everyone rah bullish. No, you should never do it. You're getting inverted HVFs performing to targets. You're getting upsides that failed on a big time frame, 4 hours. You get the funnel that fails. You get inverted structure. All this is fully compliant to further bear. Down, down. And now it's getting low. Now you could have a small little pop. And I'll tell you the final part of this analysis that everyone needs to understand is that this is against Bitcoin. So at the moment you're only looking at one half of the equation. Now if you get sucked into being bullish when this has a little run and runs up to say this level or that level, because Bitcoin, none of those, because Bitcoin makes its mini head and shoulders, for example here. So we called for a breakout, the rising wedge, that's occurred. It's got a mini head and shoulders, left head and right. Interestingly, the neckline using HVF method sitting perfectly on the 78.6% fib. The downside target there. Wouldn't surprise me to see a little spill there, and then you could get a bounce for your return move for the wedge, and then more broadly a sell-off. So at that juncture, if you're in Icon, you'll get all bullish because maybe it'll cease going down at the same rate. It could go down faster. In other words, if it's a total crypto contraction based on fear and new news and FUD, it could go down faster than Bitcoin. It could gain a little bit of this loss back while Bitcoin falls if it's not complete fear that Bitcoin is just retracing on. But it's not a key hold. You've got downside patterns that are performing. You'd need to see some sign of reversal patterns. In other words, it would have to rally up to this level, maybe give you a dip, and then you could maybe say on a short time frame you'd get an inverted head and shoulders. It's just as likely, though, that it could continue. So we go with the keep on keeping on, although it may get a little bit of wind in its sails and rally on Bitcoin's weakness, assuming Bitcoin is just bleeding out, not capitulating, in which case they would all fall. And these smaller coins have higher beta. In other words, they sell off by larger percentages than Bitcoin does in the sell-offs. So yeah, that's the take on Icon. From its bull run into its final sell-off and its key funnel level break, the squeeze, the wind-up necessary to break it. The methodology is there, and the clues are all there, and it is highly compliant like any other chart. And when you get a squeeze, you get the spill. You just have to make sure you understand what the trend is. You can't be a net-only buyer. You can't marry a coin. You should have sold. You should have sold there. You could have sold there. You should definitely have sold at that point if you're late. That rally was another opportunity to get out. It just keeps making downside targets, grind. That said, it's getting lower volatility. Eventually, at some point, it will probably make some form of falling wedge. These falling wedges can bleed out for ages and down. I'm currently short Ripple against Bitcoin. It's doing exactly that, collecting some BTC all day long, and it's doing one of these long, slow vol. Eventually, there'll be a push up and a pump. This could go to the top side of that wedge and then end up making new lows. But eventually, at some point, it will have a possibility of a run, but it can also spill out the bottom for a bit more. Don't be too early on the reversals. Be early on continuation. Be late on calling reversals. If you take anything from this, take that message. HVF method puts you early into trades and gets you out early. It is early on calling continuation, even when inaccurate in this case. And it's only inaccurate because the market's decided so. It's not a 100% system. This is not a game of yay and boo. This is just a feedback mechanism that tells you what you should be doing. You should be going long and assuming continuation. At some point, it'll be wrong and it'll turn into a reversal. Trading reversal is a poor house strategy, however. Then you get your structure. You're already warned there that it's winding up to smash in. You don't have to wait for your normal stop. Get out there. You shouldn't have lost a thing. Boom, 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 bosh. Down she goes. You could have reverted short if you're so inclined on a return move to that funnel, certainly at this very clear structure. Anyway, that's the take. But bear in mind, as Bitcoin, I keep switching to the wrong charts, as Bitcoin weakens, if it weakens, I don't know for sure it will. It could do a return move from here. Head and shoulders don't have to perform, as I've said. It's a mini setup. But we were expecting a sell-off out the bottom. We will also expect at some point a return move. The late bulls thinking, no, it's just buy the dip time. But I do feel on balance of probabilities that we'd probably have some form of meaningful dip. How would we be inaccurate? That's our probability-based scenario cast. It just goes from here and pushes straight through. That can also happen. I just feel it is the lesser probability. That's all. Just dips this far, and then next thing you know, just pumps and takes out that high. It would actually be better for the long-run bullishness if we had a full down leg. So we'd get a great amplitude from 11.8 down to 9.2 to project from the middle and post upside. That's it. Okay, that's your clip on Icon and a little bit of an update on Bitcoin.